In the midst of current market volatility in India and around the world, we have decided to switch things up a bit. Today, instead of our usual focus on small cap companies, we will be delving into the world of large cap companies. We'll be taking a closer look at a very well known company in India, one that's often considered a duopoly. Stay tuned as we review Bharti Airtel. Why is Bharti Airtel interesting now? Telecom is a highly capital intensive industry with significant entry barriers due to large amount of capital required, creating a substantial moat within the sector. This historically contributed to Airtel's low return on capital employed. However, recent earnings calls have highlighted two key developments: capex moderation and deleveraging. We believe these factors position Airtel as a potential consistent compounder over the next decade, forming the core focus of our investment thesis. That is, Airtel will grow sales and profits in a consistent manner. To those who are new to investment terminologies, capex moderation simply means reducing money spent on long term assets, and deleveraging means reducing debt. According to the latest telecom subscription data released by TRAI recently on October 2024, the two leading Indian telecom players have a combined market share of 74%, effectively making it a duopoly. Airtel holds a market share of 34%, while Jio has 40% market share. Duopolies are typically characterized by high barriers to entry, a limited number of firms, similar product offerings, and pricing determined by the involved companies. Some duopolies boast impressive ratios and operate brilliantly, while others face intense competition. Before we dive deep into Airtel's analysis, let's take a moment to explore how the telecommunications sector has transformed into its current structure, highlighting some major events from the past decade. In 2008, the Government of India allocated 122 2G licenses based on a first come first served principle, using the old prices from 2001. In 2010, the first auctions for 3G and 4G spectrum were conducted through a highly competitive bidding process, yielding 677 billion rupees for the government from the 3G auction alone. Another pivotal event that shaped the industry was the 2010 Broadband Wireless Spectrum Auction. A startup, Infotel Broadband Services Private Limited, secured a nationwide broadband spectrum slot. Interestingly, just hours after the auction, the company was acquired by Reliance Industries Limited. In 2012, the Supreme Court cancelled all the 122 2G licenses previously issued by the government at prices from 2001 in response to a public interest litigation. Later that year, the Department of Telecommunication (DOT) conducted a follow-up auction to reallocate the spectrum. In 2014, the DOT auctioned 2G spectrum in the 900 MHz and 1800 MHz frequency bands. Vodafone and Bharti, already using the 900 MHz frequency, needed to renew their licenses before they expired in November 2014. Meanwhile, Reliance Jio, the sole company in a nationwide 4G license, entered the voice service market and secured 14 circles in the 1800 MHz frequency band. Even though not very significant, there was some spectrum auction in 2015 and 2016. In 2016, Jio shook up the telecommunication landscape with the launch of its 4G LTE services, providing both data and voice offerings. By introducing free data and voice services for many months, Jio sparked a data revolution across India, forever transforming how people connect and communicate. In 2018, Vodafone and Idea decided to merge their companies in response to the financial challenges posed by Jio's entry into the market, becoming the largest telecom company in India. In 2019, the Supreme Court ruled that telecom companies had to pay nearly 1.56 lakh crores in adjusted gross revenue dues to the government. Adjusted gross revenue is AGR. This calculation has been a point of contention for almost 2 decades, with telecom companies arguing it should only include core revenue, while the government insisted on including all revenues, even non-telecom income. According to the license agreement, telecom service providers were required to pay 8% of their AGR as a license fee. Vodafone Idea's dues were estimated at around 53,000 crores, while Airtel's were approximately 36,000 crores. By this time, Jio's market share had already risen from 0% in 2016 to 30%. One of the most significant milestones in the industry came in 2019 when the tariffs were raised for the first time since Jio's market entry. All four major players increased their tariffs simultaneously, making a pivotal moment. By this time, the market had consolidated from 15 players pre Jio in 2016 to just 4 players in 2019. In 2021, another 4G spectrum auction took place, yielding 77,815 crores for the government. Jio emerged as the biggest winner, followed by Airtel and Vodafone. Interestingly, there were no bidders for the 700 MHz 5G band. Most of the spectrum was sold at the reserve price due to the limited competition among players. In 2022, the government raised 1.5 lakh crores from the first ever 5G auction, with Jio emerging as the top bidder, securing spectrum worth 88,078 crores. Notably, Jio was the only company to purchase the 700 MHz band, which had gone unsold in the previous two auctions. The base price for this band was reduced by 40% compared to the 2021 auction. Adani was a surprise entrant with a modest spectrum purchase for its private network needs. In 2024, the second 5G auction brought in just 11,340 crores, with Airtel leading the way by spending 6,856 crores. Interestingly, only 27% of the available spectrum was sold. As you can see, the transition from 2G to 5G in India occurred within just over a decade, forcing telecom companies to make substantial investments. Some of these technological advancements happened before companies could fully reap the economic benefits from the previous rollouts. With Jio's entry into the market, profit margins plummeted, making the industry less appealing to the investors. However, things have started to shift as the industry has consolidated from 14 to 15 players pre-Jio to just 2 major players today, effectively making it a duopoly. The fierce competition in telecom market eased by 2020, with Jio already gaining dominant market share. Since 2019, we have seen 3 tariff hikes, where all the major players raised tariffs together, the latest being in July 2024. The latest hike boosted Airtel's annual revenue per user, that's ARPU, by nearly 70% from Rs 126 in 2019 to Rs 209 in 2024. The full impact of this tariff hike is expected to be reflected in Q3 of financial year 25. Since 2019, annual sales have steadily risen, driven by an increase in average revenue per user and a growing market share. This growth has come at the expense of Vodafone Idea and BSNL, who have struggled with the necessary network upgrades due to financial challenges. The annual sales for the company has increased from 80,000 crores in 2019 to 150,000 crores in 2024. The impact is also clearly reflected in the company's EBITDA margins. With Jio's entry into the market, operating margins took a significant hit due to their low rates. Consolidated operating margins dropped to 32% in 2019, but gradually recovered to 52% by 2024. The standalone margins for Indian operations were even lower at 29% in 2019. Thanks to tariff hikes, the EBITDA margins for Indian operations jumped from 29% in 2019 to 54.8% in the second quarter of 2024. Airtel also has African operations, which proved to be the company's saving grace, with EBITDA margins rising from 29% in 2017 to 43% in 2019, supporting the overall performance. The industry's minimal debtor days and inventory requirements make it highly appealing in terms of working capital needs. The working capital days represent the number of days it takes a business to transform its working capital into revenue. Due to the industry's low working capital requirements, the company has very minimal short-term borrowings. Despite many of the company's operational metrics looking good, the company has historically suffered from extremely low return on capital employed, that's ROCE, and return on equity, that's ROE. ROCE measures how efficiently a company uses its capital, both equity and debt. It is calculated by dividing operating income by capital employed. In 2019, the company's ROCE plummeted to as low as 3%, but it has since steadily climbed to 14% in 2024. On the other hand, ROE, calculated as the net income divided by shareholders' equity, indicates how effectively a company is using its shareholders' equity. Unfortunately, the company's ROE has negative in both 2020 and 2021. However, it has gradually improved, reaching 9% recently. Let's come back to the two key themes the company is focusing. First, capex moderation, and the second, deleveraging. Let's take a look at capex moderation first. After years of consistent investment in technologies, the company has indicated that the period of peak capital expenditures, that's capex, is behind us. The transition from 2G to 3G to 4G and finally to 5G occurred in just over a decade. Along with substantial capital requirements for spectrum auctions, significant investments were needed for infrastructure supporting these technologies. Many of these transitions took place before the company could realize any return on its investments. With 5G deployments nearing completion, the telecom industry's largest capex cycle may finally be over. It is now time to start reaping the benefits of these investments. In other words, Airtel won't have to spend much on infrastructure from now on. After years of constant investment in tech upgrades, spectrum auctions, amid fierce competition, the telecom industry has now consolidated to just two major players, as we saw before. With the substantial completion of 5G deployment, we can now expect a period of capex moderation. This means the telecom industry might finally benefit from the end of a massive capex cycle. The company always had high capex, peaking at nearly 40,000 crores in 2024. But here is the interesting part. Despite the increasing capex, the company's operating free cash flow has been on the rise. Operating cash flow, as defined by the company as EBITDA minus capex, was negative in 2019, forcing the company to take on debt to meet capex requirements. However, with an increase in EBITDA, even as the capex rose, the company's operating cash flow showed an upward trend. Diving into quarterly figures, we can see a noticeable reduction in quarterly capex. For instance, in September 2024, the quarterly capex was 7,674 crores, including spectrum purchases from the recent auction. This clearly indicates a trend of reducing capex and increasing operating free cash flow. Most of the capex so far has been in spectrum purchases and infrastructure for various mobile technologies. The biggest challenge was that these technology upgrades and spectrum purchases didn't necessarily add new revenue. For instance, despite investments in 5G, there is no new tariff for 5G. Users are getting it without paying extra. This essentially means a lot of this was like maintenance capex, essential but not bringing in major revenue additions. Now that a lot of this is taken care of, the company can focus on growth capex in areas like data centers, cloud, security, the Internet of Things, and communication platforms, which will boost the company's return on capital employed. A more apt metric to use might be the net profit plus depreciation, as the company still will pay taxes and interest, but depreciation is an accounting entry. The quarterly net profit plus depreciation has been steadily increasing and it was at 14,593 crores. The business gives us approximately 58,000 crores in cash in a year. The total debt is less than 4 times this figure. That brings us to the second strategy, that's deleveraging, meaning paying off debt. If the company decides to use these surplus funds for deleveraging, it will further reduce interest payments. We saw that so far all profits generated, along with additional debt, were directed towards Airtel's infrastructure investments. The company's debt steadily increased due to the ongoing capex demands over the years. The long-term debt more than doubled from approximately 61,000 crores in 2015 to 151,000 crores in 2023. This long-term debt has recently decreased to 116,000 crores. The overall debt, including lease liabilities, nearly tripled, going from 83,000 crores in 2016 to 225,000 crores in 2024. The slight increase in overall debt in September 2024 is attributed to the latest spectrum auction in July 2024 and the company's dividend payments for nearly 5,000 crores. The company has been burdened with very high debt, resulting in significant interest payments that have greatly impacted net profit. Over the last 5 quarters, the company has repaid approximately 32,000 crores of high-cost spectrum debts. If you examine the company's quarterly results, you will notice that interest expenses have been higher than net profit, posing a major challenge for the company. However, the company's quarterly interest payments have started to decrease since December 2023, with only a slight uptick in September 2024. The slight uptick in interest in the last quarter is attributed to the increased debt in India and the shift of Airtel Africa's debt to local currency. Nigeria, one of Airtel's major markets in Africa, has seen its currency, the Naira, depreciate by 38% over the past year. The company initially took on USD debt to benefit from lower rates. However, the volatility in foreign exchange rates exposed the company to significant exchange rate risk. To mitigate this, Airtel has been localizing its debt. So far, 89% of it has been converted to local currency. As a result, the weighted average interest rate has risen to 13.2% from 8.8% in the previous year. Additionally, Airtel Africa has paid off a large amount of low-cost debt at the parent holding company level. The company has plans to double its data center capacity. Airtel Business is also partnering with Adani Energy to power 20 million smart meters. Let's take a look at company's valuations. On the surface, the price-earning ratio, that's the PE ratio, of 68 might seem sky high. This is a result of an unusually low profit after tax, that's PAT, due to very high interest and depreciation costs, as we mentioned earlier. However, the tide is turning. In the past 2 quarters, we have seen a notable uptick in PAT, which promises to bring down that PE ratio soon. A better metric to value this company would be EV by EBITDA due to the high depreciation. Enterprise value is a company's total value, including debt, cash reserves, and market capitalization. EBITDA is the company's core operational profitability, excluding non-cash expenses and the effects of financing and tax structures. The enterprise value is the sum of equity value, that's market capitalization, debt minus cash. EBITDA stands for earnings before interest, tax, depreciation, and amortization. The EV by EBITDA is currently at 14, which makes the valuations very attractive. Let's look at 4 key risks in telecom business. First one, the regulatory risk. This is one of the significant risks in telecom industry. The AGR ruling put a huge dent in the company's financials. The company also has a contingent liability of 16,000 crores. The company often reports various fines, which, although small relative to its operations, it could pose a risk. The second risk is from more framework upgradation and capex investments. Any further framework upgrades from 5G to 6G and additional capex investments in the near term could be a substantial negative. The third risk is from tariff stagnation. Tariffs have been increased collectively by all the players in the last 3 instances. If the Competition Commission intervenes to put a stop to this cartelization, it could be a significant setback. And the final risk is from satellite communication competitors. Satellite communication players like Starlink could be seen as a risk. However, due to their high initial setup cost and monthly fees, they may serve remote, unconnected areas. Additionally, OneWeb India Communication Limited is an Airtel subsidiary through which Eutelsat OneWeb may conduct its India operations. To wrap things up, the company finds itself in a prime position after a decade of relentless investments. The telecom industry has consolidated from almost 15 players to just two major ones, significantly reducing competition. This consolidation gives the company an opportunity to continuously raise tariff rates. Currently, the ARPU in India is one of the lowest globally, leaving plenty of room for growth. The ARPU has increased to 209, with the company targeting ARPU of 300. The last time tariffs were raised, all the players did so within 2 to 3 days, showcasing the traits of an oligopoly. Notably, the company has also been gaining significant market share in DTH, broadband, and Airtel business. With capex moderation, the company will have significant cash on hand to pay off debt. As the debt reduces, interest payments will also decrease, further boosting cash flow. This increased cash flow will allow for more investments in technologies such as data centers, the Internet of Things, cloud services, financial services, payment bank, and communication platforms. All of these will ultimately improve the company's ROCE. Additionally, the increased cash flow will mean higher dividends. Many of the company's subsidiaries like Bharti Hexacom, Indus Towers, and Airtel Africa are self-sufficient and already dividend paying. Therefore, Airtel may not need to infuse additional capital into these entities. For example, Indus Towers made a profit of 4,000 crores in this quarter alone, with depreciation adding up to 5,568 crores. With the increased cash flow, we can expect a higher dividend yield in the future. During these volatile times, Airtel could be a great value buy if prices dip further, potentially becoming a consistent compounder for the next decade. Have you been following Airtel? What do you think of this company's prospects? Let us know in the comments and don't forget to subscribe.